following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block. Whose voice is that? None other than Mark Sebastian, in place of Mark Longo. And we got a fun show for everybody today. We got lots to talk about. We had non-farm payrolls last week. We had big rallies. We've had a vol getting smoked. So let's see who's with me on my Power Pack panel. And of course, no panel can be Power Pack without the Power Pack man himself, Alex Jacobson. How are you, Alex?
Hey, Mark. Good to be here. Interesting week last week and a real quiet start to the week this week. But it's good to be here in a post-Thanksgiving, post-holiday week. Yep.
And, of course, we've got Mike Tusaw joining us via remote. How you doing, Mike?
Doing well. Like Alex said, kind of quiet today, but keeping the eyelids open.
All right. Well, with that, let's roll out of the hello block and into the trading block.
The Trading Block.
And welcome to the Trading Block. It was a slow one today. We saw the SPX up about, the S&P 500 up about 3.28 to 1808. NASDAQ up a little less than 12. And the Russell 2000 was down almost 2 points. Mike, what did you see going on today?
Well, there really wasn't a lot going on. We had a little bit of a pop in Apple. Not enough to make. I made a small adjustment on it, but nothing too much to write home about. For that matter. And for the most part, it was just one of those days where I had to put the toothpicks in the old eyelids to kind of stay awake throughout the day. I'll talk a little bit more about this in the Round the Block today, but markets like this, when there's not a lot to drive the market and there's not a lot going on, I always have a lot of concern with it because of the fact that whenever a lot of people are sleeping at the wheel, that seems to be when the market seems to want to do a lot of crazy things to one side or the other. So I'm basically staying alert as best I can, but not a lot to do at this point, for me anyway.
Yeah, Alex, it was an interesting day today. VIX was kind of bid and up all day. Weekend adjusted, it was maybe downish a little bit, but certainly wasn't getting smashed all day. And the VIX futures were trading at a discount to VIX cash all day. Did you see anything interesting in the option markets over at Option Express? I mean, what were you watching?
A little bit, but let's expand on that. Why do you think the futures are trading discount to the cash?
Well, one, they expire before the Federal Reserve meeting. Two, I think there's some expectation that you're going to see VIX get clobbered a little bit here. You know, even though the VIX expires before the Fed meeting, it expires that Wednesday morning. If there is a bid into that meeting, the December VIX future will expire into that bid. So, I think there's got to be some expectation that VIX is going to get a little bit of poundage this week.
So how low can it go? What do you think happens here?
All right. So the VIX, the December future closed 13 3/4. At this point, with over a week to go, there should be 50 cents of premium built into that. So I think that you could see a 12.8 to 13 VIX here this week, something along those lines. And that's if the future doesn't move. If we continue to see some pressure on both, we could see on Friday a 13.5 future and a 12.5 VIX or a 12 3/4 VIX.
So what are you telling your subscribers to do for the rest of the year?
I like calendars. I want to own January, or not January. I want to own April, May, June. I want to be short December and January, as I think looks like they're going to get a budget deal. I have trouble imagining the Fed doing anything in December. And we've got this holiday season that they will price out. So I like the idea of December and January butterflies against maybe some long April, May, or June volatility. And we're actually seeing a lot of that trading in the VIX.
What do you think brings the vol back in next year?
What I think brings the vol back in, I think it's a combo of Fed taper, combination of, we'll have potentially more budget negotiations. But I think I'm watching the bond market, and the bond market will cause the equity markets to be volatile, at least for a little bit, as things adjust. Now, if the Fed starts taking money off the table in stimulus, I am in the camp that that's a good thing, and the S&Ps will be higher. But I'm also in the camp that anytime when my kid's going to turn 4 here, and I'm going to start thinking about teaching him how to ride a bike, right? Within 6 months, he'll ride a bike really well, and he'll be happy that he doesn't have the training wheels on anymore, and that his dad's not holding him by the seat. But initially, as he's riding and I'm letting go of the seat, there'll be a few crashes, and I think that's kind of what we're going to see in the markets. What do you think about that?
I don't know how much of taper is priced in. I think you're right that the market will live without taper, but I think the fact that everybody knows they're going to begin to taper, and I don't know if it'll go from 85 million to 75 million, 85 billion to 75 billion, or 65. Everybody says it's going to get priced in. I don't believe that. I think the period they make the announcement in will be very difficult. I think the 10-year takes out 3 under that announcement. I think the big barometer will be the 10-year. I agree with you that I think the market will start to live without taper. But this concept that everything's priced in, I know in theory we all believe that. But I think there's still a lot of momentum-based money that will exit. And at that point, it'll actually have a decent rate because of the bounce in the bond market. But, as Tusa always says, I kind of like the market long-term. Near term, it's kind of hard to, to forecast here. Yellen's a dove. I agree. Bernanke's going to do nothing in this last meeting. There's always the possibility of a surprise. Many years ago, I was trained by somebody who said always, say you're long-term bullish, but the market could correct. 5 to 10% at any time. That's an evergreen forecast. You can use it every day and kind of not be wrong. But I think when they turn the spigot off, there's going to be some pain, and everybody knows it's coming. But I still think there'll be somewhat of an exodus. End of year here. Certainly there'll be some tax loss selling. As I mentioned on the last show, I was at an investor conference in San Francisco last week, and much of the conversation from people who wanted to talk about tax loss selling related to gold and the gold miners. So I think there'll be some rotation here. I think there'll be some more rotation into dividend stocks and dividend ETFs. Cover story of the Journal today, very distressing story, talking about how large investors are no longer trading in the listed market. They're trading upstairs. That's a very distressing story. It showed that the typical U.S. stock trade is 1/5 the size it was a decade ago. So not excited about that.
I'm sorry. I was going to say that's probably related to, you're going to get, if you're putting a big order in, you're opening yourself up to front running, and until the big exchanges fix their block trading rules, I think you're going to see that.
Yeah, and I think the high frequency trading has driven a lot of people to other venues. I mean, the cover story talked about the fact that even the institutions are doing more and more upstairs on the crossing vehicles. But it's distressing because, we've talked all year about the lack of liquidity and how markets are thin. And, it's easy to talk about thin markets in December and say it's the holiday, but we've talked about it all year. And now to see that the average trade size has fallen, distressing. I'd like to see that trade size go back up to where it was in the late 90s and 2000 era. But, we could do shows on high frequency trading and penny pricing and front running. It comes back to confidence in the markets and the individual investor coming back in. And, if the savvy institutions are looking for an alternative venue, it's a distressing story. I'd like to frame it in a better way. But, today was really a non-event. It was very slow. As I said, when I surveyed the desks, they came back with confusion on American Airlines. Twitter was hot today, and Twitter, at least here, is finally getting more of an individual investor following. Tesla's had a couple of good days here, trading back up in the 140 and change area, and there's a lot of option-based business. Obviously, Apple pays a lot of bills in e-commerce brokerage and the market maker community. Tesla less so, but seeing some trade lift out of Twitter here was good to see.
Wow. Well, that's great. So, yeah, I mean, I think it's going to be I love that your line, we could drop any time, but long term I'm bullish. It's perfect. But yeah, I mean, if you want to know what's going to happen, stop looking at the equity market, start looking at the bond market, and that will let you know. Because, the bond market may not lead the equity market, but I can promise you the equity market won't lead the bond market.
Can we live with it? Can we live with 3-year 10, a 3% 10?
Can we live with that? Yeah, I think the key is how do we move through 3%? Don't you? I mean, if we go to 3%, and then if we ease to 3% and then stay there, fine. If we blow through 3% and then you watch the bond market have to hedge off a bunch of, CMOs or asset backs or whatever, and they're forced to sell treasuries to cover their other positions, and we get kind of a structural sell-off, and we make a run at 3.5, the equity markets are going to be ugly.
Yeah, I agree.
But I have no problem with 3%.
Yeah,
at all.
Everybody my age talks about their mortgage rates way back when.
Oh, yeah.
And 3% 10-year means about a 4.5%-ish, plus or minus 30-year. After tax, a 4.5% means you're paying 2.8, 2.9 for money, obviously depending on the rates and state taxes. And if you're my age, you say 4.5% for a mortgage is still cheap money, except you have a whole generation came up where that number, the first handle was a 2 or a 3, who view 4.5% as too high a price to pay. It'll be interesting. A couple of the home builders report this week. I mean, the home builders actually start to report. We're taping on Monday the 9th. The home builders start to report on the 10th and 11th, and it will be interesting because I think the housing number is a number that in people's minds gets spun the way they want. Mm-hmm. What I mean by that is if they own a house, they see nothing but good news in the numbers, good news in Case Shiller. And if they've delayed buying, they see nothing but glad I didn't buy in the numbers. Housing is a number that I've never seen massaged so effectively to suit whatever people want it to suit. But if the home builders come in here and the numbers are flat to okay, I think that will bode well. If the home builders come in weak here, then to your point, going through 3, depends on how we go through it. If we go through 3 and go to 3.1 and kind of start trading in that range, it's less onerous than if we move through 3.5. The 10-year market is now more volatile on the daily basis than the S&P is. Mm-hmm. And again, to the point you made, Mark, that's frightening. And it's clear that the bond market here is clearly the price discovery for what's going on in the U.S. market as a whole. So next few weeks to months will be interesting. And I agree with you that I think volatility will be materially higher next year. But we could see vol crush here. I mean, we could see vol, 10, 11 here in the quiet part of the end of the year.
I concur. The one thing I locked in my rate outs below my 30-year below 4%, and was explaining to my in-laws, who are smart people, that I was having trouble imagining a scenario other than selling my house where I would ever prepay, and within 5 years believe that I would be arbitraging the 10-year against my mortgage.
Yeah, well, back to the point though, even below 4 after tax, you're paying 2.6, 2.7 after tax.
Yeah, and now imagine I move into some sort of double tax exempt muni with the 10-year at 4%. I'm going to be doing pretty well for myself.
Yeah,
this is not the municipal bond block. This is the option block. And with that, let's roll out of the trading block and into the express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. And with us is, of course, Alex. I'm going to shut my mouth here for a second and let the man, the myth, the legend, the power player that is Alex Jacobson pontificate.
Well, in talking to the desk today, there were a couple things lighting up the phones here. It was a big day for the T's, Twitter and Tesla. Both moving 4 handles. Apple had another good day. But one thing that kept the phones busy today was trying to figure out the American Airlines deal. And I know that's not an option-related topic, but I know it's something that's sitting in a lot of customer portfolios. I had a couple of folks from the desk come over and explain it to me and gave me exactly opposite explanations. So it appears that the former holders of American Airlines who expected something in the neighborhood of a $12 or $13 payoff from all this, looks like they are getting 1/15 of a share. So it looks like less than even a $2 payoff, which doesn't seem to sync up with Friday's price in American Airlines. And I don't know if Mike wants to chime in on this or if you had any U.S. Air or American on your books, but I think it confused a lot of people today in what was really a very quiet trading day. But that's what.
So real quick, Alex, just to sum up, for American Airlines, people were expecting to get approximately $13 per share, and they're only getting about $1 per share based on a share amount with which they're getting.
Yeah, that's what it looks like. The deal turned into 0.065 shares of the new company, and the stock was trading like 11.12. The AMRQ, the bankrupt stock, was trading like 11.12 on Friday, and it looks like the deal only gave them one share for every 15 shares. So there's a lot of head scratching going on, and I went to a couple sources to read the deal, and I'm not sure I understand it. But it sounds like there will be a lot of disappointed investors on the street comparing Friday's close in the bankrupt company to today's pro rata share distribution. And I expect there are going to be a lot of unhappy investors.
Wow.
Yeah, wow is right.
I feel bad also for all the employees of American who probably have all sorts of stock in the company through the years, too. I mean, this kind of goes to show the importance of not getting too position heavy in your own company stock.
Yeah, I don't think in reading the deal, it looks like and I know I'm going to get emails on this, it looks like the creditors and employees got a better deal than the investors. It looks like the creditors and employees are being made whole, and the stockholders are the ones who are getting the 0.65 share in exchange for shares. So fortunately, hopefully the employees, hopefully no one is hurting this, but the way I read it, it looks like the creditors and employees are being made whole and the stockholders are getting a fraction of what they had on Friday.
And that's the risk of owning equity, and that's also why when you're an employee for a company, if you receive options and they are in the money, it generally behooves you not to quote unquote Texas hedge yourself by owning lots of your own company stock of the same place you work, unless you absolutely have to. I've always thought that if you work for someplace and you own optionally a bunch of stock that you don't actually have to own, you are Texas hedging.
There's two thoughts on that, and something we've debated for years. Obviously, diversification is a great idea, and don't put your eggs in one basket. But the two wealthiest people in the United States are totally undiversified. So there's two thoughts. Either
I agree with you there, but I think the big difference is that they're the founders of those companies. I think there's a difference between diversification when you are I think less diversity at the top is generally a good thing because that says I believe in the company I'm running. More diversity at the bottom, where as you lose control of your destiny, that is where you should be. You need to more and more diversify.
Again, the argument goes both ways. It's be bold and be a venture investor, and if you're an employee of Apple or Microsoft or Berkshire, and you're in the Berkshire ESOP, you've done very well.
True.
I guess the key solution is don't hold a lot of a position in a company that fails. That's with the clear benefit of
That's sound advice for anybody.
Yeah, that's the benefit of hindsight. So that's what was going on today.
That reminds me of that Better Off Dead where with the skiing. Or what's the joke with the guy that walks in the doctor's office, says, it hurts every time I do this. Doctor says, so don't do that. That's really the key. Is if you think your company don't go down with the ship. Is really the key. And read the tea leaves. And if you're going to work someplace and own a bunch of stock, then, one of the advantages of working for somewhere is that you should have public knowledge of the company that is better than everybody else. Take advantage of that. All right, Alex, anything else exciting going on at Options Express?
That was quiet today.
All right. Well, with that, let's roll out of the Express block and move into Around the Block.
Around the Block.
And welcome to Around the Block. Here's where we'll talk about what we see. And Mike Tusaw, what do you see coming up?
Well, there's really not a lot going on right now. I mean, we're still waiting to see Bernanke's final meeting coming up, but in all honesty, I'm really not expecting a whole lot from it. If I'm Bernanke, I would want to leave a legacy of someone who didn't want to rock the boat his last meeting. So there's really not too much happening. One of the main things with which I'm watching as an option speculator as well as a risk manager, I want to just make sure that we don't get chopped out too much in these last couple of weeks of trading for 2013. I'm being very cautious, and I really want to protect the gains with which we've been able to achieve so far this year in the bullish portfolios. So for the most part, I'm erring to the side of caution over the course of these next few weeks.
And is there anything exciting going on at RCM here in the next couple of weeks?
Well, not a whole lot going on at RCM right now. We're taking a break for the remainder of the year on the webinar train, but we're getting geared up for January. We have very much the all-star studded cast coming up for the month of January. So stay tuned, folks. There's a lot to come in the new year.
All right. Alex, what are you watching for the next week?
So it kind of sounds like a broken record, but looking at the 10-year home builders earnings coming this week. First of them start to come out tomorrow. Be interesting to see what the home builders are reporting, because I think that's a big piece of investor sentiment. Big piece of the wealth equation is how people feel. Other than that, it's been quiet. As I say, the phones today were reasonably quiet. Volume levels have been okay, not as soft as I would have thought. But I think we're going to be in a quiet period here. Don't think the Fed's going to do much next week, and that's what we're looking at.
Yeah, and anything exciting going on at Options Express here?
In terms of excitement, full webinar schedule coming up. We do Wednesday, December 11th. David Hightower will be in with one of his monthly futures commentaries. Also then on the 11th, webinar covered calls in IRAs. Last live event of the year in St. Petersburg, Florida, this Saturday, a live event. But if you're not in St. Pete, you can come to the site, register for the event, and you can participate in it as a virtual participant. You can ask questions to Jimmy Ruzan, who's our presenter while he's live down in St. Pete. And that's what's going on here.
All right. Well, those are all events that you certainly don't want to miss. So with, on a personal note, I'm watching, there's really not that much. We had some Fed speakers. We do have some earnings start to come out, a few retail. There's nothing really strong economically until maybe Thursday, where we get jobless claim and inventories. One of the claims on GDP was that there was a big, huge inventory build. So I'll be interested to see kind of what that has to say. And then aside from that, there's a 10-year note auction, a few other things, but I don't see a lot of things coming up until, we may see people start to think about the Fed maybe Thursday or Friday. But, I'm watching the 10-year, which was smartly saw the events of last Friday coming and moved from 2.7 to 2.85 well ahead of time. And I think you're going to see something similar. If the 10-year starts to move, then, maybe there's something out of there. But, if the 10-year's not moving against the Fed, then, they may be wrong that the Fed decide and guess that the Fed tapers early. They're certainly not going to be wrong in guessing that the Fed's not going to be tapering. If they're going to be overly cautious, not underly cautious. I can promise you that much. So if the bond market moves on the Fed, it's more likely to move down than bonds are more likely to rally than to sell off. That'd be my bet. In terms of Option Pit, we just had a great webinar with the Options Insider on Saturday. It was a lot of fun. Longo did a great job. So did Andrew and myself. Of course I did. It's me. And in terms of other events coming up, we'll probably have a free webinar coming up. Probably not this week, probably not next week, probably not. Well, we'll try and slip something in the month of December. And we're looking forward to a great new year. We got some exciting announcements coming up. So on that note, I hope everybody has a great day. And we will see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.